Will market crash and recession happen in 2024? Now the answer to this question is to understand if high interest rates are here to stay. And if that is the case, then no one will be spared from its impact. Consumers, businesses, governments, house prices, stocks prices, even bond prices. I am going to explain what this means for the economy. But before that, let's recap on how we got to this point so you have the right context and don't get blur sotong. March 2022, U.S. Central Bank, the Federal Reserve, hiked interest rate in response to skyrocketing inflation, previously thought as temporary or transitory. And then it got worsened by the Ukraine-Russia war that broke out a month prior. For your information, any central bank, like the Federal Reserve, manage monetary policy by adjusting the country's interest rate, which is the rate that banks pay to borrow money from each other for one night. In other words, the puppet master, the central bank, uses interest rate as a tool to either slow down or speed up the economy. In this case, the US Fed was trying to slow the economy to bring down inflation with it. So in 18 months from that first interest rate hike, the Fed continued to lift the interest rate from close to zero in the March of 2022 to mid 5% as we approach the end of 2023. Something we have not seen since the 1980s, but fortunately, the rate hike seemed to work. Inflation went down from all-time high 9% in June 2022 to hover around 3 to 4% now. Expect it to trend lower. The Fed be like slay, giving themselves a pat on their shoulder, congratulating itself for fixing an issue they created in the first place, which is printing too much money during the pandemic and keeping interest rate too low for too long in 2021. Now that said, here's the plot twist. The Fed is still not satisfied because they insist that their target inflation rate is at 2%. As long as the inflation is above 2%, the Fed has said that it is committed to keep interest rate high. That said, just because the Fed said keep interest rate high does not mean it's going to keep hiking interest rates indefinitely. The vibe is this. The Fed chairman, Jerome Powell, said that because of the progress that he and his colleague have seen in bringing inflation down, the central bank probably does not have to increase Fed funds rate much from here. It is already at a level that, according to Powell and the Fed, is restrictive enough to slow the economy and inflation over time. Also known as the lag effect. Just like if you lao sai chirit berit, you take your medicine, your chirit would not stop immediately, it will probably take like an hour to take effect, okay? However, he also potong steam when he said that just because the Fed will eventually stop hiking rates does not mean it's going to suddenly turn around and start to cut interest rates. It is going to keep interest rates high at or near that peak level for as long as it takes to ensure that inflation comes down to 2% and stays there. And people be like, that is BS, that's cap, fake news, because most people expected that once the Fed stopped hiking interest rates, it would quickly U-turn and then start cutting interest rates. Why? Good question. Because the fast and furious hike in interest rate would slow down the economy dramatically, pushing it into a recession. Not even after the shocking collapse of Silicon Valley Bank and other regional banks earlier this year. In fact, rather than slowing down sharply, the US economy seems to be holding steady and even strengthening, which is a shock. It's like you throw a cat from 20th floor and it survives. With no evidence of recession, financial markets started to accept that rates would stay higher for longer. And this higher for longer narrative might exactly be the reason that yields on the all-important 10-year US Treasury as well as other longer-term bonds spike in the mid of October 2023. But that is not the end of the story, because the next conspiracy-like narrative can trigger a recession. The conspiracy theories say that long-term interest rates are staying high or going higher, not only because central banks are doing it for the plot to weaken the economy and driving down inflation. Central banks' actions are for more structural reasons for years to come. And these are huge government debts, deglobalization, tight labor market, geopolitical divide between US, China, and Russia, the superpowers. For instance, the US government and corporations have been pushing to bring manufacturing back to US due to tensions with China. This trend, called deglobalization, could drive up prices. That's why your iPhone is not designed in California, made in Silicon Valley. Instead, it is designed in California and made in China. Also, facts, early retirements and this financial independence retire early movement are trending. Yes, mostly by baby boomers and even millennials. But regardless of your age, the thoughts of early retirement is living rent-free in your head. Am I right? Plus, birth rates are at their lowest level in decades, so the economy has less workers as time goes by. A tighter labor market that gives active workers more negotiation power to demand higher salary, which then get passed on to consumers through higher product prices or even services. To summarize, deglobalization and tightness in the labor market will increase the long-term rate, of which in turn will cause the bond market investor to demand higher interest rates return as a result. Now, this is still facts. Larger and larger government debts cause the government's always lacking financial discipline, like a spoiled brat spending more than it is earning, spending money on other people's affairs. US government debt now is at 33 trillion, highest ever. As that debt grows, the government is going to have to borrow an increasing amount of money by selling treasury security, which will only be purchased by investors if they come with higher yield or interest rate. So, if the conspiracy theories are right, then that low interest rate era for the past 20 plus years has ended, and we are radically shifting into a new era of higher interest rate, and this new era may or may not start with a recession. Curious on what do you think? Let us know in the comments, and this is the next clip you want to watch.